Hi, today I am getting into the real estate market forecast for 2025. If you're wondering what's going to happen with home prices, mortgage rates, and affordability, you're in the right place. This video includes surprising charts that you're not likely to see anywhere else. Eye-opening stuff you don't want to miss. So let's get to it. Okay, this video is going to focus on United States stats with some tidbits about the connection of those to Marin County. Home prices are still climbing, but at a slower pace. Experts agree that home prices won't be crashing in 2025, but they do expect that prices will continue to rise, although much more slowly than they did during the pandemic boom. Here's what the big players are predicting. The National Association of Realtors expects home prices to rise 2% year over year. Zillow predicts a 2.6% increase. Realtor.com is on the higher end, forecasting 3.7% growth, and Redfin projects a 4% price increase. Now, if you're a buyer, you might be thinking, great, more price increases. Just what I needed. Yes, sarcastic. But let's put this into perspective. During the pandemic, we did see double-digit price increases year after year, making homes completely unaffordable for many buyers. So while prices may still rise in a lot of the United States, not necessarily here, they're not skyrocketing like they did in 2021 and 2022. Plus, like I just said, in Marin County, we can't say that prices are still climbing. If you watch my stats video, you know prices are down in Marin. So we are more likely to not be able to predict a coming increase. The market is balancing, but it's not a buyer's market yet. Back to US stats. There's some good news for buyers. The market is shifting towards more balance. Here's what's happening. In January 2022, there was just 1 month of home supply, a record low. Now we're in about a 4-month supply, which is a huge improvement. In more than half of the 50 biggest cities, list prices actually fell in 2024, and in Marin too. Miami saw prices drop over 10%. So what does this mean? It's still a seller's market in most areas and also in Marin, but we're seeing early signs of price resistance. If mortgage rates stay high, expect more sellers to lower their prices to attract buyers. By the way, I'm Karrie Hill, lawyer turned realtor, and I love to help people just like you buy or sell a home in Marin. Just book a free call consultation by hitting the link in the description below, or if that doesn't work for you, just email me. Oh, and I can also provide free realtor referrals anywhere in the US. Email me for that too. Mortgage rates. Where are they headed? This is the biggest factor shaping the 2025 housing market. Right now, mortgage rates are hovering around 7%. Many buyers were hoping for rate cuts from the Federal Reserve to bring rates down. And here's what's most interesting that I don't see anyone else highlighting in the news, and that is that so far, that hasn't happened. In fact, despite the Fed cutting rates by a full percentage point since September, mortgage rates have actually risen by 0.9% in the same time frame. Why? Because mortgage rates don't just follow the Federal Reserve. They follow inflation, investor confidence, and economic uncertainty. What to expect in 2025? Rates might drop slightly, but won't return to pandemic lows. Actually, it's pretty unlikely that I'll ever see those in my lifetime again, those low under 3% rates. If rates stay at 6.5% or higher, affordability remains a major issue. Lower rates could stimulate buyer demand, as it does here in Marin when rates just fluctuate temporarily lower, but lower rates might still keep inventory relatively tight as sellers are waiting for better conditions. You know, those ones that are likely not coming, those better conditions, at least not coming for decades, if ever, those super low rates. Anyway, bottom line, if rates don't drop significantly, buyers will continue to struggle with affordability. More on affordability in a minute. Home builders are slowing down. Is that a sign of big trouble? The predictions all point to higher prices overall, but home builder stats point to a more ominous suggestion. Okay, new construction doesn't impact all markets, especially not much here in Marin County, but it does affect the national housing supply. Here's what's happening. Lennar, a top home builder, saw its stock drop sharply in Q4 2024 because they aren't doing so good. Builders have been offering major incentives, lower prices, buy downs, and perks to try to move their inventory. Construction activity is slowing down, and builders are expecting lower profit margins in 2025. So why does this all matter? Builders have a front row seat to housing demand. And if they're cutting back, it's a warning sign that buyers are struggling even in the face of lower new home prices. Total units under construction are dropping fast, meaning builders expect fewer sales ahead. If affordability doesn't improve, this slowdown could trigger bigger price reductions later in the year. Affordability is still the biggest problem. Now let's talk about the real issue in today's market. Homes are historically unaffordable. Here's a few eye-opening stats. Home prices have surged 65% in the last 7 years. Mortgage rates have doubled, causing monthly payments to skyrocket. The National Association of Realtors Affordability Index is at its lowest level since 2005. In fact, median mortgage payment now eats up 30% of the median monthly income, which is higher than during the last housing bubble. And here's the crazy part. The only time homes were less affordable than today was during the early 1980s, when rates were over 15%. What does this mean for 2025? Buyers may continue to wait for better conditions. If rates stay high, prices may have to come down to restore that balance. More price drops could happen in the high-cost markets like Miami, Austin, San Francisco, and who knows, maybe even Marin. Will there be a housing crash? The big question everyone asks always is, will I see a market crash? The short answer is probably not likely, but we could see some more softening. Here's why it's not likely to be a crash. Homeowners aren't underwater. The last crash was driven by bad loans and forced foreclosures. Not the case today. Inventory is still tight. Even though it's improving, we don't have an oversupply of homes. Buyers still want homes, but affordability is the issue. Instead of a crash, it's likely we'll get a slow correction. Some markets will see flat prices, others small declines, and a few will continue growing. And note, by the way, that all those experts who really rely on real estate for their livelihood, they all still think it's just going to keep going up, but at a slower pace. So this is very different. And of course, who really knows what's going to happen? Nobody knows. Okay, final thoughts. So what is the takeaway here? 2025 is shaping up to be a year of slow price growth, stubbornly high mortgage rates, and continued affordability challenges. If you're a buyer, patience might be key. If the rates fall, demand will increase, so waiting might help. But if you find the right home and can afford the payment, lock it in now. You can always refinance later. If you're a seller, price realistically. The days of major bidding wars on overpriced listings are totally gone. Buyers are more cautious, and homes that are priced well will sell. The housing market is always changing, and 2025 will be no different. Stay informed, be strategic, and make the right moves for your situation. If you'd like more information about living in Marin County, or some information about buying or selling a home, which includes a lot of great information for home sellers that you really should know, check out the videos that should be showing right now. And hey, please subscribe. It really helps motivate me to keep pumping out this content. Thank you for watching, and have a great day.